two big numbers that are out there. The first is coverage on the actual end user, meaning if you give us your phone number and date of birth, can we actually authenticate you as the individual? And our coverage there is between 95 and 98%. And then on the liability side, our coverage there is also between 95 to 99%, depending on the type of liability. So credit cards, we're at 99.5%. Personal loans, we're at 95%. Student loans were at 99%. Auto loans were around 90%. So you can see, that it sort of depends a little bit on the type of loan, but fundamentally our goal here is to try and get to 100% universal coverage on every type of liability that you have.
This is the FinTech One-on-One podcast, the show for FinTech enthusiasts looking to better understand the leaders shaping FinTech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with FinTech founders and banking executives. Today on the show, I am delighted to welcome Tomás Campos. He is the CEO and co-founder of Spinwheel. Now, Spinwheel is a FinTech infrastructure company focused on consumer credit data. They have built what I would say is a very sophisticated system that allows any lender, bank, marketplace, or PFM platform to connect quickly and easily to all of a consumer's liability accounts, be it credit cards, personal loans, auto loans, mortgages, student loans, and more. They do this with just 2 data points, phone number and date of birth. Curious to learn more? I certainly was. Now let's get on with the show. Welcome to the podcast, Tomás.
Thanks for having me, Peter.
My pleasure. So let's kick it off by giving the listeners a little bit of background about yourself. Just tell us some of the highlights of your career to date.
Been in FinTech for more than 20 years now. So an old timer, I guess, in the space. Really cut my teeth on building infrastructure for one of the world's largest prepaid payment networks. And that was sort of where I really found the impact that you could have in FinTech by building out core infrastructure. Mm-hmm. So, did that for about 10 years. And then I spent the last 10 years building companies. So I've been a founder a couple times now. Have really focused on how to build infrastructure for FinTech.
Okay. So then let's talk about Spinwheel now. So how did this idea come about? What happened that led to the founding of Spinwheel?
Yeah, so it really came from the core thesis that when my co-founder and I saw the broader landscape of FinTech infrastructure, there had been some fantastic value creation and investments across the board. So think of payments, think of open banking infrastructure, think of banking as a service. Sort of across the board, you saw even in sort of investing, you saw these infrastructure capabilities that came up and really opened up how value could be created in the space. But we saw over and over again that for us, the biggest piece of the puzzle was still missing, and that was on the liability side, the consumer credit side. And we kept coming back to this because when you look at the average household balance sheet in the US, the average household balance sheet in the United States has more in liabilities, more in debt than they have in assets and investments combined. And then when you think about this also from an account standpoint, so the number of accounts that the average American has more debt accounts, more liability accounts than they do bank accounts or investment accounts. And so we looked at this and said, why hasn't there been this investment or this emergence of this same sort of substrate, this infrastructure to power those markets that we saw across the board? And so that was the general thesis that needed to be created to unlock the value that we'd seen in other FinTech infrastructure areas. But what really was sort of the spark that caused myself and my co-founder to jump into this was when some of my own family members started really struggling with their own financial obligations, their own debts, and came to me and asked for, what was the best app that they could use, or what were the solutions in the market that they could leverage to help them, get better or improve their situations. And when you looked across the board, there really weren't any. There was a bunch of failed solutions out there.
Right.
And that actually sort of underscored why we thought it was so important to build this, because when we looked at to why these apps or these solutions never delivered on their promise or failed, it's because the infrastructure was missing. It was too hard to build value or create the value needed for the end consumer or for the business.
Right. Well, yeah, as someone's been in the lending space for a long time now, I mean, focusing on it for the last 15 years, and I know many of the companies that you're probably referring to that, basically started, even created a little bit of traction, but never kind of got to where they needed to go. And it's been a perennial disappointment to me that some of these companies never made it, because I feel like the personal financial management space, it should be focused on liabilities, and it just hasn't. It hasn't really. I mean, you can certainly connect your credit cards and your auto loan and your mortgage if you have one, but it doesn't really do much other than let you see.
And to your point, Peter, just think about what you just said. You just said, your credit cards, your auto loan, your mortgage. For the average American, that's connecting at least 7 accounts.
Right.
So that means if you had to do it previously, that's 7 username and passwords you have to put in. And that's 7, username passwords you have to do probably every 4 to 5 months. And so just right there is a great example of the friction that caused so many of these solutions to never take hold, or to really keep the consumer engaged on the liabilities, because it's just too hard to do and to keep up. And then to your point, if you were one of the few that actually did do that and kept up with it, then what were you going to do? It would just sort of help you see what was in front of you. But if you wanted to take any action, you had to go somewhere else to do it, which
is still the case really today for most of these. I mean, I have a PFM app that I use. I look at it every single day, and I'm conscientious. I connect things when they disconnect, but they disconnect regularly. And I still think it's kind of crazy here in 2025 that we can't seem to get the connections right. But anyway, I want to sort of dive into a little bit about the Spinwheel story, because I think you started right in the student loan with a student loan focus, and now today you're even moving beyond just the credit side. So tell us a little bit about how Spinwheel has evolved since you started.
Yeah, that's absolutely right. We did start with a focus on student debt, and the focus was, the goal was to always provide the solution across all the consumer debts. But when we looked at sort of the landscape, student loans is very unique in a couple ways. One, it's the most complicated consumer debt that's out there. You have multiple sub loans nested under one, servicer that contributes to an overall interest rate. Each of those sub loans have their own terms, their own repayment plans. Some are subsidized, some are not. And it was also the debt that most people get into at the earliest in their lives. And so we said, well, hey, that's a great starting point to tackle this infrastructure. If we can get that right, then we can kind of tackle everything else. So that's where we started. In March of 2020, we had the pandemic, and rightfully so, they paused all student loan payments. And at the time, the expectation was that maybe this pause would last for maybe a year or so. Almost 4 years later, and the pause was still in place, it made it really, really challenging for anybody who was doing business in the student loan space. And so that really helped us accelerate the coverage across all different consumer liabilities, which is where we're at today.
Okay. Who is using Spinwheel, and what are some of the different use cases?
Our clients kind of fall into 3 major buckets. The first bucket would be if you are a client that's, let's say, oftentimes a marketplace or a resource for consumers to, let's say, learn about what are the consumer credit options available to them. So think about, let's say you go to like a NerdWallet and you try to learn about maybe what's the best credit card for you, or maybe does it make sense for you to consolidate your debt with a personal loan, or all these sort of different things you may decide you want to do. That client is very important for us because we can help them personalize the experience to that end user. We can help them use the data that truly that consumer actually has, and then match them with the right product, with the best product that they might be able to get for whatever the intent they have is. So that's sort of the first use case. So think about it as sort of the discovery and the matching between the consumer and the consumer financial products that are out there. The second would be the lenders or the issuers that offer those products. So the use case there is being able to clearly understand the needs of the end consumer, leveraging the data, the actual and live data that the consumer has to price the loan, the interest rates and the terms appropriately and better, oftentimes better for the end consumer. And then ultimately being able to disperse the funds from the loan, from the new loan to any existing loans that are out there. So think about things like transferring the balance on a credit card, or if you're consolidating existing credit card debt with a personal loan, we facilitate the ability for those payments to be directly dispersed to each of those loans without the end consumer having to go and upload statements or log into their accounts or anything like that. It's all done with just a phone number and date of birth. And then the third use case would be what you just mentioned. So think about those personal financial management use cases where the end consumer is just trying to stay on top of the liabilities and the debts they have today. This might be things like understanding the due date or understanding what your minimum payment due is or what the interest rate is on that, and being able to make the right decisions as to maybe which ones you pay off, which ones you pay a little bit more, or which ones you maybe just pay the minimum, but being able to do that seamlessly without having to go through the friction we just talked about earlier of connecting all your accounts one by one, and being able to make those payments all in one place. So those are the three major use cases that we see today, but they're all connected because they help the consumer across their entire journey with their consumer credit.
Right. So you just mentioned it, but I do want to dive in a little bit. I know you're not going to give away your secret sauce, but the reality is you've said that you can find all of the liability accounts with a phone number and date of birth, not even an email address, because phone number is obviously a unique field. Date of birth is not. I just love to kind of get a sense of the infrastructure that you've built. You decided that those two data points was all you need. And does that, I guess, what can you tell us about those two data fields that are so special?
It's important to note that if you just sort of take a step back today and you think about the way you or I or anybody typically authenticate ourselves and verify our identity to third parties, username and password is probably the most prevalent one that we're familiar with.
Right.
But that's not actually a great way to authenticate Peter or Tomás.
No.
All that communicates is that somebody knows the password and username and password to Peter's accounts or Tomás's accounts. So that's not really a great way to prove that it's Tomás or Peter. Then you can look at other solutions out there like out-of-wallet questions, or oftentimes called knowledge-based answers, right? So this is where I ask you what street you grew up on, or, did you own this car in the past, or, what high school did you attend? Things like that. And those oftentimes are used also to verify an individual. But those are also pretty bad as well, because especially today, most of that stuff can be socially engineered or discovered through social media. When we looked at this, we took a step back and said, if we could fundamentally demonstrate that we can authenticate the individual and verify their identity, that is much better than the other solutions we just talked about, which in those two solutions I just talked about, those KBAs and username and passwords, that's a common way that today we interface with our accounts. So that phone number and date of birth essentially allows us to authenticate and verify you, because we go out to multiple data sources on the back end, and all those data sources have to point back to the right individual. We then are able to do things like look at attributes around the device, so your phone itself. We can prove that you actually have possession of your device by sending a text message to you on that device, a one-time passcode, right? So all these technology behind the scenes are being used to verify that you are who you are and that your identity, that you essentially have authenticated yourself. Once we do that, then we're able to use that authenticated identity, authenticated Peter or Tomás, to then go back and work with all of our data partners to retrieve your data as you. So that's like a very, very fundamental thing that we're doing here that really has removed so much of the friction.
Right. So you're not going into the person's checking account per se and just looking at all the transactions there. It sounds like you're going into other data sources, because obviously the checking account has liabilities, incoming and outgoing, but you've been focused on the liabilities for the most part. So how are you kind of getting a clear picture? Like the data sources you're using, what kind of coverage are we talking about here? And I am not a typical user. I have 16 credit cards. All of them are connected into my PFM. And I also have many different, I got a spreadsheet of like 40 different records in it of different assets that I have. So that's not typical, but I'm curious about, with those two pieces of information, your data sources, what kind of coverage are we talking about here?
Yeah. So we usually like to think about it. There are two big numbers that are out there. The first is coverage on the actual end user, meaning if you give us your phone number, date of birth, can we actually authenticate you as the individual? Yep. And our coverage there is between 95 and 98%. Mm-hmm. And then on the liability side, our coverage there is also between 95 to 99%, depending on the type of liability. So credit cards, we're at 99.5%. Personal loans were at 95%. Student loans were at 99%. Auto loans were around 90%. So you can see, that it sort of depends a little bit on the type of loan, but fundamentally our goal here is to try and get to 100% universal coverage on every type of liability that you have.
And so the liabilities that you don't have, you're just not able to authenticate correctly, or there's all kinds of different types of liabilities, some that have very, very offline type coverage. So what prevents you from the 100% today?
It really is just about how quickly we can tap into those data sources. So let's talk about a couple of them. So let's take tax debt, for example. So if you have maybe a tax lien on a property, or you owe taxes, that's also considered liability. We today have not completed our integration into the IRS to go and pull that back, but that's something on a roadmap, right? So that'd be an example where that's not there today, but we will pull it in. Medical debt is also one that's very, very tricky. One, because the definition of medical debt itself and how that gets reported is still gray, right? But we feel that once we have sort of a very clear understanding of what really constitute medical debt and in what use cases it should be surfaced, the goal is to be able to tap into those data sources and be able to pull in medical debt as well. But those are just two examples of where, we may not be able to pull it in today, but it's something that's on the roadmap to pull it in.
And when you're pulling in, are you pulling in just an account balance? Are you pulling in payment behavior? What kind of data do you pull in?
Usually it's all the above. So it's a combination of the existence of the account balance itself, the attributes around that balance. So typically it's going to be a due date and the minimum payment due, and then also typically the payment history. So it'd be, have you made the payments, and what is the nature of those payments? What's the size of those payments on that account?
Right. Gotcha. Okay. So then let's talk about the lending use case. I think this is one that is really interesting to me. How is a lender using Spinwheel? Like obviously before Spinwheel, they have their credit reports, they have cash flow underwriting that they can go use. Where does Spinwheel fit into kind of the whole workflow of a lender when a borrower is coming in, potential borrower, they're either seeking like a new loan or potentially increasing in a credit line or what have you? Where does it fit?
So two big areas for lenders. The first one is really going to be more around streamlining the application process and receiving more accurate data. And this is across any type of loan, any type of lender, right? So if I can reduce the amount of data and the number of fields you have to enter in manually, Peter, that's a good solution. And as long as it's verified information, it's a good solution for the lender and it's a good solution for you, right? It removes errors, it removes gaps. It also makes it easier for the consumer to get to the point where they can actually see the loan offers and things like that. So when you think about the very first use case across all lenders is how do we streamline that application process and provide them with accurate information, both about the individual and their existing debts. And so that helps them get a better picture of their DTI, that gets a better picture of the individual. So that's one of the key use cases. The second key use case in lending is really around debt consolidation. So when you think about debt consolidation, this is typically going to be a loan that you are taking out, a new loan you are taking out to pay off or pay down existing accounts, right? So that might be a refi, that might be a personal loan to consolidate your credit cards. It might be a HELOC to consolidate maybe your auto loan and some of your other high interest rate loans like credit cards. It also includes use cases like credit card balance transfers. So maybe you have an outstanding balance with one credit card and you want to transfer that balance to another because you're being offered a promotional rate for transferring a balance. All of those fit into this use case that we call this sort of debt consolidation use case. And in that scenario, where they use us is for one, ensuring that they have visibility of those accounts, those other accounts that you have that you're going to be consolidating, right? Accuracy there. 2 is understanding the real-time balances and payoff amounts for each of those accounts. And the third is being able to disperse the funds, send the payments directly to each of those accounts. So that's what it is. Now, if you were to contrast that with how that's being done today, these use cases today are relying on end users uploading statements, looking at their apps, typing in what their balances are, trying to define what accounts they have. And most of the time, that's not only error prone, but it's not even reliable. So today, most of the time, lenders are just saying, Peter, tell me what you think your balance is, and I'm going to send you a check. And I'm going to trust, Peter, that you take that check and you go send the money to these other accounts to pay it off. Well, whether you had all the right intentions or not, oftentimes that money never makes it to those other accounts. Maybe it's because you forgot, or maybe it's because when you got the loan, you figured you wanted to go to Vegas or whatever it is. And so the problem there is that when, as the lender, I underwrite you for a certain amount, expecting your DTI to stay in a range because you're going to pay off these accounts. Well, if you don't ever pay off the accounts, your DTI is different. The loan's going to perform poorly. The interest rate should be different. And so just by that simple fact of being able to, 1, know the accounts accurately, 2, understand the balances and payoff amounts, and then send the funds directly to those accounts, it streamlines the entire process and makes it easier for these lenders to actually do debt consolidation loans.
Well, I remember the growth of the fintech lenders very well in like 10 years ago when fintech lending was really getting some traction, and it was very hot, and VC money was flowing, private credit money was flowing. And this was the big issue at the time, was because you could tell, obviously, they would pull credit after the fact. They go, oh, look, they took out a debt consolidation loan, but only 30%, I don't remember the exact percent, so don't hold me to it, but it was a smaller percentage than I thought. 30% went and actually paid off the debt. All the rest just kept it and just moved on. And again, so the payment behavior is going to be so different for those two types of borrowers. So I could see how that does make it a very, very compelling use case for the lender. So I want to ask a little bit about how you sort of built all this. And you go to your website, which I'm on my other screen here, and you talk about a lot of the things we've discussed. We chatted a few months ago when you were talking about how you really are an AI company. You've built a lot of the technology with the latest AI models, but you don't mention that much, or you certainly don't lead with it. I haven't read the entire site, but you don't lead with that. So how are you using AI agents, and what is just tell us how you're using AI in general.
And you're right, we don't lead with it because it's a lot of how we do it. And while some people care about that, most people are interested in, the what or the why, not so much the how. But you're absolutely right. From the very, very beginning of building the company, we understood that AI was going to be one of the key levers to make this even all possible. Mm-hmm. So the best way to think about this, Peter, is when we go and connect to your account, it's not one integration to one data source. It's actually 7 or 8 integrations on the back end to get all those different types of attributes. That might be a combination of bureau data, payment network data, bill payment data, public records data, and it's not always a linear process. Imagine this, Peter. Imagine today if you had to go and get all the information about your accounts. You'd probably have to go log into some apps. You may have to go make some phone calls. You'd probably have to go look at some statements. You'd have to go to different sources to try and get the full picture of where it is today. Well, AI enables us to do that. It's really that orchestration that we have to do across all these different data sources in the right way to be able to pull the information on your behalf. And that orchestration is extremely important, and you can't really do that without AI. So really what's happening behind the scenes is we have an AI agent that gets spun up on your behalf to go and understand where all this is and to go through the processes to do it, to pull it back for you in a very, very timely and accurate way. And that allows us to make our APIs a seamless, reliable API to our clients, when behind the scenes, it's a very messy world, a very messy process, but we can use AI to make this very, very reliable and accurate.
And given that you've been around for a few years now, and like the whole Gen AI revolution, shall we say, is still less than 3 years old since ChatGPT 3 came out. How have you kind of leveraged the new capabilities of these AI models that you didn't have access to when you started the company?
Here's a great example. So, in a previous company, I had built a platform that did natural language processing and text to speech and speech to text for conversational commerce. And this was, back in 2016, 2017. And that was a lot of work, and the accuracy and reliability of that wasn't fantastic. It was good enough. Mm-hmm. If you look at where we are now, any of those same capabilities that we may have in terms of being able to process documents, process text, extract what you need from text, any of those things, that's almost trivial now because of AI. Right. So previously we had, I had to build a whole company to do that. And now, we can plug in to our own models that are running these AI agents to be able to process all of that. And so that's to me a very, very clear example of how AI is helping just democratize things and lower the cost and increase the efficiency across the board.
Right. It actually reminds me of a keynote we had at one of our Lended events back in the day. I think it was 2016 or so. We had a keynote from one of the leaders in AI at Google, and he gave this fascinating presentation about photo recognition and saying how, photos of dogs versus cats and how to tell the difference. And back then, I can't remember what the number was, but it was reasonably good. It was like 95, 96% you could tell a cat versus a dog. Whereas I'd say today, it's got to be very close to 100%.
Yeah,
but at the time, it felt like, oh my God, this is so revolutionary. It was nothing to do with fintech, but it just showed the power of the technology, even back in like 2016. Anyway, I want to ask about this. One of your specific, I guess it's a product that you offer, the Optimize product. I found this really interesting. Because you say, on average, companies using Spinwheel Optimize are saving their users $150 per month. Now, that is not insignificant amount of money. And I'd love to sort of get a little bit more color on how you're doing that.
So from the very, very early on, what we recognized was that there might be more, but there's typically 4 main intents or goals that an end user or a consumer may have. Being able to improve my credit score, being able to reduce the interest I'm paying on my loans. It might be to free up more cash flow each month. So maybe decreasing my monthly payments to each my debts. And the other is I have a goal for a large purchase, which might be I'm trying to get my my debt to income ratio into a certain level. They'll support whatever purchase I'm trying to. Maybe it's a home, maybe it's a car, whatever it is. So those are the 4 goals that when we looked at Spinwheel Optimize, we recognized these drove most of the optimization, and it was unique because, for example, Peter, you may be in a position where you say, hey, you know what, my cash flow is fine if I maybe pay 20% more per month, and that lowers my interest rate by 10%, 15%, whatever it is. That might be what your goal is. But someone on the other side might be like, you know what? I don't have the cash flow. And so even if my interest rate's slightly higher, but I get, $50 or $100 more in my pocket every month for groceries and other commitments I have, that might be the goal for them. And so what Optimize did is it took, these goals and we applied weights to each of these, right? So someone may say my primary goal is this and my secondary goals are this. And we took those weights and we said, okay, if we can now understand your exact profile, all the details on your debt, we can not only understand how to support that goal and provide a plan, exactly how to do that, but we can also make that plan actionable. So if part of the plan was to pay that 20% more every month, well, great, you could do that. You could automatically make those payments. If your goal was to consolidate the debt into a HELOC, for example, because you can save 15% on interest rates there. Well, great. We could actually make the ability to apply and refi with that HELOC actionable through the APIs. And so that's what Optimize really is. It's a combination of the logic, those intents, the weights, the ability to spit out that plan, and then for that plan to be fully executable as part of our APIs. And what's interesting, going back to that sort of AI discussion you said, Peter, is that when we started, this was still very kind of algorithmic, and users still had to be heavily involved in all of the different actions. What we're seeing now is that, probably within the next 18 to 24 months, that should be fully automated, where an agent should do all of that for you, Peter, and it would just, take your goals, you probably provide some guardrails, and it'll just go execute and handle all of these things for you. And it would check in with you every now and then to tell you how it's doing. But it's fascinating how that's going to play out.
Yeah, it sure is. So last question then. I'd love to kind of get your vision for Spinwheel and where you think this is going. Are you staying on the debt side? And if so, do you see Spinwheel as a tool to kind of help Americans kind of get out of debt or have a better financial situation? What are you trying to do here?
The mission for us has always been anchored around how do we provide better financial outcomes for the average American in the US. We can all relate to that as individuals, in the company. The view here is that having debt and borrowing is not in itself a bad thing. For me, it's enabled me to grow my wealth, because I was able to purchase my house. There's things like that where borrowing money can actually be a lever for you to increase your wealth or achieve the goals you're looking for. The challenge is that oftentimes that it doesn't act as that. It becomes something that can hold you back. And so our goal is that if we can provide the technology, the infrastructure that pushes the needle more towards that lever to help you achieve your goals versus the anchor that's keeping you from achieving those, then we're doing our job right. We want to shift the pendulum and shift that lever more towards debt being something that's a tool for you to achieve your goals. And the way we see to do that is through the companies that you engage with today, where you're getting your loans, you're paying your loans, you're discovering them, you're managing your money. And so just by that very nature, if we can improve the financial outcomes, if we can improve the businesses that are clients, and through them, they improve the financial outcomes of the individuals, we're achieving our mission. And so where we're ultimately going with all this is we look at this and we say, anything that really can impact consumer credit, consumer data, if we can find a way through technology and infrastructure to improve that, then that's sort of in the scope and the vision of what we're trying to do. We're not trying to be out there and be the next open banking player. We're not out there trying to be the next banking as a service platform. Our focus is really on how do we tackle what we think is one of the largest issues today, which is liabilities and consumer debt. And that, if you boil it down, is a function of data and actions. And so if we can get more data to help with that, we're going to go get it. If we can enable the actions that enable that, we'll go do it. You can think of us as we're going to be adding more data and more actions. We're constantly doing that for the life of the company.
Right. Well, it really is. It's a noble cause, because that can make such a huge difference in so many people's lives. Anyway, Tomás, it was really fascinating chatting with you today. I appreciate you coming on the show.
Thank you so much.
We were chatting after we stopped recording there, and I was lamenting the fact that we ran out of time. I never got to ask Tomás about fraud. He said, no problem. Fraud is really not that big of an issue. He made the point, do you think fraudsters are going to want to hack into your account so they can pay off your credit card debt? Not very likely. It doesn't mean that fraud can be ignored. It just means that when building infrastructure for managing liabilities, there is not the prevalence of attacks that you see with other infrastructure. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.